This morning, I actually sent a trade on NASDAQ that was going to be a buy position. I even told you guys that you could actually take advantage of the momentum of NASDAQ and actually try to hit a 5-to-1 when it comes to that trade. Me personally, I was able to make around $1,000. It was like $900 today with this trade, but there's a lot of people who are actually missing the opportunity when I send the trade. So in this specific video, what I want to do is I want to teach you how to follow my trades so that you can make even more money than the one I'm making on a daily basis. So if you wanted me to explain this strategy to you, this is the opportunity. Hey everyone, Christian here on YouTube. Welcome to a brand new video for the channel. Today, I'm gonna teach you my Forex strategy, the one that I use every single day and the one that has made me last month over $40,000 just in profits with one broker's account. So hey, if you're new to my channel and you're into Forex, crypto, or any type of making money online, this channel is for you. Hit that subscribe button below and let's begin. Hey, before I actually start with the content of the strategy, before you do anything, you got to choose the best trading platform for you. And that could be a prop firm or it could be an actual broker. If you're actually going to go through a prop firm, this is the one to go. It's called Prime. Prime, it's a Forex trading platform, Forex prop firm that you can actually get an actual funded account for up to $300,000 if you demonstrate that you're a good trader. I'm going to have the link to both of them below in the description of this video, to the broker and the prop firm. But yeah, this is the one that I'm currently using and it's just insane. It's got the platforms that I want, which is the X-Trade, and on the worst case scenario, MassTrader also, and they also have MT5 in case you have a robot. But yeah, this is the actually company that you should go to if you are going to be trading with me. And the broker, by any chance you don't want to use a prop firm and you prefer to actually put in your own money and trade your own, then IC Markets, it's definitely a fantastic option. One of the things that I really like in regards to IC Markets is that it's been in the market for like, I don't know, for like 15 years, no issues at all. And it's an Aussie broker that is fully regulated and it has pretty much the majority of the good reviews online. If by any chance you're in the US, I'm gonna have the link to a broker that allows US traders below in the description of this video for you to check it out as well. All right, so this was today's trade on NASDAQ. And like I said, I always send these trades around 7:15, 7:20, like right here. And I always say that you should wait for New York market opens. That's non-negotiable. You have to wait for the New York market opens. All right, so I don't know what's going on here, but there you go. One thing that you need to understand when it comes to this specific strategy is that what we try to take advantage of is the momentum of the index when the market opens. So in this specific scenario, I saw a support and resistance trend lines, both of them. And I also saw a high support level based on the London session right here. And I also saw a low level based on the London session here. I also saw a mid-low level in this area that could be broken. But this is the signal that I sent. I also sent a sell position that didn't activate, but you get the point. Now, here's where the market opens. 720, 725, and this new candle is the one the market opens. And if you notice, like I said, at the very moment that the market opens, this usually happens. And the jump was insane. And the next candlestick right there actually dropped a little bit and then it retracted and boom, hit the stop loss, right? This was the trade of the day. I sent it and I told people, take advantage of the jump, take profits or whatever. Sometimes, actually like I would say 60 or 70% of the times, I actually hit the 5-to-1. Today I didn't, but the 5-to-1s are super simple to follow. I mean, you just put in the trade and then you make 5 times profits against whatever you risked. But that's not the point of this video. The point of this video is so that you understand how to make money when these trades actually happen. And more importantly, how you can even make more money than me, because I ended up losing this trade and then I ended up recovering on another setup, but I ended up losing this trade too. Why? And how you can do better. This is today's trade. Now, one thing that you need to understand when it comes to market opens is that I always use the stochastic oscillator just to have a clearer view as to where the market could actually move when the New York market opens. It's actually quite basic. If the market opens and the stochastic is in a position that the price is going to drop it's very likely that the price will actually go into that direction. Probably not immediately, but overall. And if the stochastic is in a position to buy, then that's probably the direction that the price is actually going to take. I always look at the 15-minute candlesticks in order to understand that. So if you notice, at the moment that I enter the position right here, or that I sent the trade right here, the stochastic was in a position to buy. So I said, okay, if it's the position to buy, it might actually go all the way here. And if it breaks this level, I always told them, if you break this level, like this resistance, and the candlestick actually closes above this, then there's a huge possibility that the price continues to defy the one. It's not guaranteed, but it's a huge possibility. In this specific scenario, as you can see, the market opened in the next candle, not on this one, but the next one, and the stochastic was in a good position to buy. So what it did, it was to do all this jump. Unfortunately, it faked those out, because the coolest thing would have been if it would have continued for the next couple candlesticks. It didn't. So what it did instead is that it retracted and respected this trend line. Now, obviously, like I said, it's impossible for us to know exactly what the asset is going to do, but I can tell you exactly, or not exactly, but I can tell you like possibly what's going to be the fast movement. Let's go ahead and do another example right here. Let me go ahead and get New York markets. I don't know where I'm at. All right, here market opens. All right, he opened too fast. All right, market opens, New York market opens right here. The next candlestick probably is going to be the one that is going to do the jump. So as you can see, we have a low right here on London session. We have a high right here on London session. This is just a fast example, all right? I'm not saying this is exactly what you need to do. But one thing I actually look at, like I said, is at what the stochastic is actually doing. Literally, depending on the stochastic, I can say that there's probabilities that the price actually will go into that direction. So right here, for instance, I could actually put a buy position. I'm not sure if that actually happened that day, but I can put a buy position right here, 5-to-1. And the stochastic actually is the one that's going to tell me where the price is going to go. So right here, it didn't happen. You see, it didn't cross. Like I said, it doesn't happen all the time. That's the beauty, actually, and probably one of this is not applicable. I mean, you didn't enter and that's fine. With the stochastic, what you're going to do is that you're going to avoid entering fake outs based on just randomly looking at. You have a clear idea. For instance, let's see this one right here. So this one right here, this one is crossing already. So it's quite risky, actually very risky. But this could easily be turned into a buy position here in the breakout, somewhere there. I don't want to like take that much of your time. Based on what it did, you see it crossed. And since the market opened when the cross had already happened, it went in the opposite direction. That's something that could happen. Now, I don't know. This is probably were news in that day. Look at all this crazy movement. Let me find a new example, and that's going to be it. Yeah, there were a lot of news in here too. All right. So here we have a high level and a low level right there. Take a look at this stochastic. I don't even know why is it doing this, but let's say sometimes it happens. I mean, the stochastic is not clear. Here I would put two positions, one buy, one sell. And that's what I actually sent in the signals group. I will wait for what's gonna be the next movement, and as you can see, it like since it crossed before market opens, once the market opened and then it crossed going up. Like I said, it doesn't always happen like that. Like it's like right there, the cross before it happens, but it gives you an idea, okay? It gives you an idea as to where the direction of the asset could actually go. And that's something that whenever I send the signals, I want you to really pay attention, okay? For instance, this one right here, this is a market open craziness, that's for sure, but the price is completely oversold. This one, I would even say in 5 minutes, most likely, yeah, in 5 minutes, this happened, this trend. So I would even say, hey, if it breaks, this could be the good entry. Why is that? Because of the stochastic in 15 minutes. You see, I'm not sure if that's gonna happen. I mean, I'm not looking this backwards, just way some traders that would actually do it. I'm literally doing it live. And as you can see, it continued to go up just a little bit, but it kind of gives you the idea that, for instance, if the price was completely oversold like this, then most likely the price was not gonna open breaking down. Does that make sense? Having said that, and coming back to my example of today, I wanna teach you how to do trailing stop. How to do trailing stop, because that's what's gonna make you money even when the trades are not doing good. Okay, so for instance, this one right here, this candlestick that you see right here, this is a 725. So the next one is the one that's gonna open your chart. What is it that we're gonna do once market opens? Right there, this is where the market opens. You see, when this happens, when it moves all the way up, this is the first thing that you need to do. You need to move your stop loss all the way to the entry point. That's called breaking even. So what that's going to do is that if the price actually retracts and goes back into the wrong direction, you still are going to be able to not lose money. Okay? That's number one. If you are a little bit more experienced, if I were you, I would actually close partials. Let's say you open 5 lots on this position, close 1 lot per every single level. You could do that. If you open less than that, and then you can just close half of it. It's really up to you. One thing that you also need to understand, it's just impossible to see this acting like really live. But at the moment that you see that the price, for instance, it reaches the 2-to-1, which it almost did, move your entry point to the 1-to-1. That way, if the price retracts, you still made a 1-to-1 into that position. So for instance, if you were risking, let's say $1,000, then you made $1,000 in profit. Somewhere here, you could move your stop loss or close the entire trade or your profits in there. Obviously, you're not going to close the trade right there because you actually expecting, since it broke that hard, you're expecting the price to actually go up. Unfortunately, this time it didn't happen, but you get the point, right? That's trailing stop. And my biggest recommendation is move one risk reward ratio at a time. When it goes to move 1-to-1, move it to break even. When it goes to 2-to-1, move it to 1-to-1. When it goes to 3-to-1, move it to 2-to-1, and so on. You can keep on doing that for like 10-to-1. It's really up to you, but you do get the point. Okay, that's what trailing stop actually is. And before I finish with this video, I just want to give you a warm invitation. Like, where is it that I actually send these trades? It's right here, BLW Signals Group. BLWSignalsGroup.com is the website. You're gonna have the link in the description of this video. Well, basically what it is that this is a private Telegram channel. I stream live and I send my setups on a daily basis, and Monday to Thursday, and I tell you exactly where I'm going to be trading, what the direction, the entry point, the stop loss, and so on. And then I keep my screen active most of the times so that you can actually see live what's going on. The invitation is right there. Go to blwsignalsgroup.com in case you guys want to trade live with me. Hopefully I can see you there. Hey, so hopefully you enjoyed the content of this video. If you did, smash the like button as usual to support this YouTube channel. And more importantly, if you have any questions or comments to share, you can always use the comment section below, and I'll be glad to take a look at those comments as usual. Thank you for watching this video, and I'll see you on the next one.